I'm Brian Murray, and today's discussion point is market stats, the two biggest lies. Number one, months of inventory. When people ask, is it a buyer's market, is it a seller's market, what they really mean is months of inventory. Traditionally, months of inventory takes the number of sales that you've had in a given period and divide it by the number of available homes, and whatever that comes out for, how long would it take to sell at this sale rate to sell out all of the homes on the market. So let's say in the last 30 days there were 100 sales and there's currently 400 homes for sale. That would be 4 months of inventory. A neutral market is somewhere typically 5 to 6 months of inventory. A buyer's market is 1 to 3, a seller's market is 1 to 3, and a buyer's market is typically more than 6 months of inventory. But when you look at months of inventory based on sold properties, you're missing the market. Those sold properties are 60 days ago. A lot of times, especially now in the COVID times, it takes about 60 days from contract to sale. So what you're looking at isn't real months of inventory. It's a stat that doesn't have any real-time data to it. If you want a better stat, you would look at under contracts to availables, because that's really going to give you a much more compressed look. If you look at the under contracts homes that people have signed for the last 30 days and you compare that to the available inventory, that will give you a much better look-see in terms of what the market volatility really is. You could go down all the way to a week's worth of inventory, but then the numbers start to get very dependent on, hey, what week was it? Because right now we're looking at Thanksgiving week, and it's very likely that the number of contracts during Thanksgiving week will be less than last week and less than next week, because you lose some days. You lose Thanksgiving, nobody's writing contracts on Thanksgiving. And in a traditional market, you're basically losing the day before Thanksgiving because a lot of people are traveling or prepping their meals. You lose the weekend after for Black Friday, for family time. I mean, COVID might be slightly different, but I don't really think that that's going to be the case, and we'll look at those numbers next week. So I would definitely use a month worth of inventory for that. And then the second misleading statistic when it comes to real estate is days on market. Everybody wants to know, well, how long has that been on the market? Now they're kind of it's almost like a bunch of it's sheeple is what I call them. They like to follow the crowd. Well, if it's sitting for 50 or 60 or 80 days, well, it must mean that nobody else wants it, or there's something wrong with it. I hear that all the time. There's something wrong with it. Maybe. But maybe it's really the price. Or maybe it was on the market for 60 days and they just reduced the price. So now it's on the market for 61 days, but they reduced the price by 7 to 10%, and now it's really competitive within the marketplace. And so somebody who's going to look at the days of market and discount it is going to miss out on that property. Or someone who's going to look at the days on the market and say, oh, well, it's been on there for 61 days. I'll offer 5% less than already the reduced price. Sellers, it's a non-starter. So those two stats, the months of inventory and the days on market, are two statistics that you really need to have a pro explain what's happening in the market.